What's up, YouTube? Welcome back to another video. In this video, we're going to be talking about trend, right? We're going to be talking about how to follow the trend, why it is important to follow the trend. And you hear all the time, the trend is your friend. Well, that is 100% true, right? The trend is your friend. Once you know how to correctly identify what the trend is, where the market is going, that makes it so much easier for you to go on, lower time frames and catch better entries to get better RR, right? And you can't do that if you don't know where the market's heading. You don't know what the flow of the market is. And that's why it's so important to understand what structure is and, things like that. Okay, so before we jump right into it, you guys already know all the links for our services are in the description and all those things like that. I'm not going to rant on about it. If you have any specific questions that you need to answer on, you could hit me up on Instagram. Okay, so we're going to jump right into it and we're just going to talk about how important the trend is. All right, so UJ is going to be the best example for this video of why it is important to follow the trend. Okay, so as you guys know, USDJPY has been going bullish forever. And it's not the fact that USJPY has been going bullish, it's the fact that we have people, I would say retail traders, I mean we're all retail traders, but the less informed retail traders trying to short UJ. Why are we trying to short UJ? Why are they looking for shorts? Why? Right? Well, you can think of it because, it's going too high. At some point, it's going to stop, whatever the case may be. They're correct, right? At one point, it is going to stop. But have we seen that happen yet, right? We haven't seen any selling pressure. We haven't seen any bias from the sellers to get in this market. The only time that we have seen that is right here where we had this fake distribution. Okay, sellers tried to get into the market right here and ended up failing. And we also talked about this distribution inside the Discord, how we thought it was going to be a fake distribution. And that's one of the most important things when you learn how to follow the trend, that you don't fall for fake distributions, fake accumulations. Because guess what? This whole thing is considered a reaccumulation, right? The best reaccumulations are going to look like this. They're going to start off looking like a distribution like this. They're going to come off looking like a distro, and then market's going to fly up, right? How can you predict that? Well, technically, there's no defined way that you can predict that. There's clues and little things that we use to kind of assume that this is going to be a fake distribution, but there's no defined way to say that this is going to be a distribution. So we have to put all those clues together to understand why this could be a fake area. We have structure, right? Maybe structure was bullish already. Okay, structure is bullish. We have minor sign of weakness. So in this case, I'm going to talk about this right here of how we could assume that this here is a fake distribution. The first thing that I look for is look at the structure of the distribution, okay? Look at the structure of the distribution. So essentially, we have low, high, right? And this is very important because in a schematic, in the distribution schematic, we know we see minor sign of weakness. The minor sign of weakness only happens when we trade below the trading range. Where is the trading range? Buying climax to automatic rally, you can see how I have these lines drawn right here. That's my trading range. Anything that goes below here is considered a minor sign of weakness, right? That tells us that there is interest in sellers if we're able to trade below this trading range. Okay, essentially, you see, we didn't see that here. We didn't see no kind of stoppage inside the market. We didn't see any, minor sign of weakness. We didn't see any selling pressure. Okay, we seen the market slow down, but we didn't see any selling pressure. Okay, there's a difference between the market slowing down and selling pressure. All right, now you could go ahead and say, well, maybe this was the selling pressure. No, this was a liquidation. Okay, this right here was a liquidation. The reason why I say this is because this is a higher time frame schematic that has been created here. So essentially meaning when schematics play out on a higher time frame, it takes a lot more money for institutions to create that schematic. Okay, a lot of money was being placed here essentially. Okay, so if this was going to be a distribution, it would have been a distribution, right? Institutions are not going to waste their money creating this. So essentially what that means is this was not a distribution. That wasn't the purpose behind this schematic. All right, it came out looking like a distro to create a lot of liquidity underneath these lows, manipulation, and then we go towards the upside. So what is the purpose of this? The purpose of this is because this happens a lot, okay? This happens a lot in the market. You'll see it all the time. If the market is going down, and we're going to do a bearish example, if the market is going down, sometimes you'll see something like this. We'll see an accumulation occur Boom. That happens. Why? The market is bearish. That's why. Okay? So that's why we try not to, go based off the schematics. Okay? There's a bigger understanding into how the trade Wyckoff supply and demand without just looking at schematics themselves. So the main point of this video I'm trying to get at is follow the trend. Once you identify your trend, and that's why I have structure as number one here on my 3 keys. Right? I seen a video of someone talking about why am I talking about structure when I'm doing a top-down analysis? What do you mean? Structure is the most important thing in your top-down analysis. Okay? Structure is the most important thing that you need to know. That's the number one thing that you need to know. Without knowing your structure, how are you going to do a top-down analysis? How do I know how to play UJ without looking at my structure? So once you identify the structure that you're in, whether you're bullish or bearish, then that helps you not get faked out when the market tries to trick you with these fake schematics, okay? So that is the main point that I'm trying to get with this video, guys. Do not fall for these fake accumulations and these fake distributions, okay? How do you not fall for it? One, understand your structure, right? Understand your structure, where you are at in the market. We can look at GU as an example. I've covered GU. We are bearish. Okay, cool. Now, if GU goes ahead and do something like, let's say GU goes ahead and gives us a little accumulation, are we going to fall for that? No. Why? Because overall, we are bearish. All right? Overall, we are bearish. Imagine how much fake accumulations there were down here. Okay? And if you were just focused on sales, you wouldn't have fell for those fake accumulations. All right? So that's how that I prevent myself from taking stupid losses with accumulation and distributions. Once you identify your trend, follow your trend, okay? If the market is bearish, you're looking for sales and sales only until it proves to you that it wants to change. You'll see when the market wants to change, okay? You'll see it. So that is a good example, and that is something good that we want to talk about, because we see people trying to buy bearish markets, right? It's insane, guys. We don't want to do that. We don't want to be buying bearish markets, all right? If the market is bearish, keep selling it. Eventually, the market is going to change, okay? Eventually, the market is going to retrace or whatever. The market's not just going to keep going up forever, right? The trend is not just going to keep, going forever, right? So what would you rather do, all right? This is a question for you. What would you rather do? Let's say we have this market going up, then boom, all of a sudden we go down, right? So would you rather take sells or take buys, knowing as soon as we invalidate this, the market is going to start coming back down, right? So look how much potential L's that you're taking. In a bearish scenario, it's the same thing. I know you guys heard of don't try to catch a falling knife, right? Don't try to catch it. Keep selling the market. If the market is bearish, keep selling the market. Follow the trend. Don't try to predict the bottom. That's not what we do here. So one more market I want to talk about. Let's talk about USD CHF, right? We're going to talk about this bullish run. Look at this trend, right? Look at this huge bullish trend towards the upside. Now, as the market is going up, it is accumulating, it is distributing, right? There's distributions in here, there's accumulations in here. So are you going to be more in favor to take the accumulations or to fall for the distributions? Okay, I tell you guys all the time, keep playing the continuation moves until it gets invalidated. Look how much the market has ran up, going up, up, up. Imagine you're trying to sell this, sell it, sell it, sell it, sell it, and you're not getting an opportunity to sell. And then with you trying to sell it, you have your mind focused on only sales. You missed all the buying potential. Okay, you miss all the buying position. That's why I don't even look to try to catch the reversal of the market. I just try to play the trend all the time. I'd rather be a part of this huge trend than try to catch this retracement back down, right? It doesn't make sense. And let's see if I can find something, a good example to end it off on. I think there's one right here. Let's see. Okay, there's one right here. So let's look at this, right? Remember, I told you guys we're in a bullish trend. Just because we are in a bullish trend doesn't mean you're not going to see distributions. Look at this. Clean distribution, right? Look what happened. The market went down, came into a demand, and validated like it was nothing. We took out that distribution like it was nothing, because it is nothing. It is nothing. These are all tricks, guys. They will create these moves. They will create distributions just to get the market inside of an area that they want to buy it and continue higher. It will happen, right? So do not be a part of these fake distributions, right? If you're paying attention to this distribution right here, you would have never considered taking a buy, because now your mind is focused on sales. So, long story short, guys, do not fall for these fake accumulations and fake distributions. All right, that is the purpose of this video. I hope you guys got some good information from that. If I do need to go more in detail, let me know. But I just wanted to give you guys a simple video and a very helpful video that can help you guys out taking less losses. All right, so I will see you guys in the next video. Peace out.